ladies and gentlemen. I'm Joseph Novichkov, Senior Trading Manager with GDM. Welcome to today's webinar. It's Friday, and of course, it's the last webinar for this month. Now, ladies and gentlemen, what we spoke so far throughout the whole month of webinars, we've been talking extensively and only about swing trading. One of the first two sessions that we took this month, we've been talking mostly about how to recognize the trends for swing trading, where would be more appropriate to enter. Of course, we also saw exactly where the trends are reversing, and of course we have recognized the three stages of trend reversal. Today, however, we will talk a little bit more about profit taking, stop losses as well, everything that we should protect our own balance for a simple reason. Well, this is all that we are working for. We need to take these profits. Now, what we're looking at in front of us, we're looking at 4-hour gold chart with our absolutely simple setup. Of course, before we actually continue with today's topic, I need to make a few reminders of what we did so far as to, should we start taking profits, we need to know exactly where we stand at this moment. Now, we saw that when we're correctly using support and resistance levels, we see that, all of these levels are acting accordingly. We're taking profits the way we should. Also, we're entering positions most of all the way we should. And furthermore, we know exactly where the trend is reversing. Simply put, our setup by itself is brilliant. We don't need anything else. We need, as we spoke earlier this month, where we are in a trend, we know exactly where that trend makes its key, key supports, key resistances. Now, speaking of which, we don't really need to use the Fibonacci retracement levels, okay? For a simple reason that we can only use horizontal lines. It's pretty much the same. It works the same way. It gives us pretty much the same perspective, should we put it this way. And of course, we always need to know if we are here, okay, within the first stages of the trend. 1, 2, 3 formation, as we mentioned earlier. Our entry stands over here after the first initial shot up, and of course the second one and the third one. This is pretty much where we exit most of our positions, or some large part of it. Next stage is of course on the additional positions, should we put it this way. You can pretty much enter within the midst of this one, these whole bunch of candles. We did see some negative results here, a downside, but we can't really know that the market would do that. Okay, we have everything fulfilled from technical perspective of the market. We have a large volume candle breaking above the resistance here. Okay. Then of course the market gets a little bit choppier, then down backwards, and of course key support over here before it actually makes the right move up. So in any case, we did not make a mistake if we enter over here. We could of course sustain some particular running loss on our accounts, but being a swing trader, ladies and gentlemen, always it consists an amount of time that you might be running some kind of profit or loss, in some cases loss, before you actually start getting up. And of course, we saw exactly on these two tops, also the neckline here, where the market made its absolutely 100% fulfillment on this double top formation. And of course, we saw how the market started reversing, basically speaking about the trend. This is the candlestick we spoke the last time. We see that the trend started reversing. This is stage number 1. Key level here, stage number 2. And of course, that one was stage number 3. This one or this one. I would like to take the 1262 as a key support area from a historical level. So as we can see from these moments here on the market, it's not this one, but it's actually this one and this one here, which is actually acting rather than larger support than resistance. On a Fibonacci levels, of course, we saw that 1258 is actually the 38%. Okay, then we have the 50. Then we have the 61.8, but that's irrelevant right now. Okay, we don't really care about these kind of percentages right now, unless we're actually aiming to take kind of profits. Now, if we see that the market have fulfilled its third particular stage of a reversal, which is by far the most important one so far, is if the third one is completed, that means the trend is going to reverse to the downside. Most of all, speaking of trend reversals, is to admit that the trend is over. Okay, by recognizing 3 stages of trend reversal, we basically have our rules of the system the way they should be. Okay, now first stage of profit taking. This is what we're going to be talking right now. First stage of profit taking is here. Okay, this is your profit here. Take profit. Your second stage of profit taking is somewhere in the midst of this particular area. This is also profit taking. And of course, down here, when the trend actually reverses, then you can start taking your profits here as well. If you had positions which scale way back over here, okay? So we don't really want to lose that profit, or this one here, okay? Because we already know that this move is going to be at least 3 times, as it usually is, before ends in a sideways direction here, and then start moving straight back upwards again. As we all know, the key element of Dow Jones industrial average, we have the Dow Jones theory of trends, and this is that the trend is more likely to continue instead of reverse. So what we see right now, let me just clean up the chart a bit so we can see much better. What we see right now is that the third stage of trend reversal is not yet confirmed. So we still have relatively huge, let's put it this way, huge range for gold. Of course, that's pretty much normal. Also, if the market breaks above this stage, which is stage number 2 in our previous case scenario, okay, this would of course mean that the trend would most likely continue. And of course, it could be confirmed as a continuation if it breaks above this area here, okay, above this one. Now, this is a level of 1290, 1292, 1290, something like this. I would like to take 1290, 92 as a more of a confirmation of the likeliness of the trend continuation. Speaking of the case scenario, we are at this stage on gold. We saw on Wednesday, when we had our previous webinar, how the market started building momentum to the downside. Okay, now what we saw was, I suppose it was, I think it was in this candle here, if I'm not mistaken, or this one maybe. One of those, I'm not quite sure. I have to check. It's April 25th. 50 has this one here. So it's 26th actually, but that doesn't matter. So here in this stage, the market tried to break that key 1262, stage number 3 of our trend reversal. And of course, you can witness the histogram actually pulled back in. So it actually became smaller. So this one and this one suggests that the trend would most likely continue, or at least in the short period of time, the direction of gold prices would be to the upside, because the key level of 1262 was not broken. Of course, that doesn't necessarily mean that it won't happen today or next week, for example. It could happen. It's just safe to say right now that we can actually witness a sideways direction for a short or medium period of time until the trend continues or reverses. So when we know that gold prices will be sticking to the sidelines, we better focus on something else. It's very interesting that we still have some of our positions still running. Okay, it's very important for you to understand, guys, that when you're a swing trader and you have positions that you're holding for a long period of time, you better hold it on until the trend is actually over and the confirmation comes here. So while that said, we have a continuous uptrend on dollar yen. Why is that? Well, it's one thing is that the trend is still alive. Is that this sideways direction and the price action did not broke below the 111 support area. From then on, we could actually start looking for 3 stages of reversals, and those are on key areas. Like, for example, the first one would be 111. The next one is sitting at 110.7, or I'm looking at it 110.5. This is one of the key areas from where the trend could start reversing. And the third stage is 110, and this is actually the pivot level. You see where the horizontal line is on these problematic cases. So from here, we can actually start looking for further downside. So if we have actually bought the dollar against the yen somewhere around here and here, that means right over here, we should actually take this particular profit. And that's 1 full yen. That's $1,000 if you're trading 1 lot. Okay? But of course, you're still running pretty good profits. This is close to 2,300 or 2,300 so far. But this is just an example. Also, same case scenario we have for oil prices. You know, some of the cases that we discussed the last time, okay, on these key resistance areas, we still see that the trend is alive. The downward direction is more likely to continue instead of reverse. But at this moment, it's just sitting on the sidelines before it actually continue or reverse. So what we have here is if we have entered positions somewhere here within these spikes on the trend line, okay? So from here to here, or at this current price, we're looking at a roughly $3, a little over $3. That's $3,000 of profit for about 35 sessions. Also, if we have positions on each peak here as well, we would be running pretty good profits at this stage. But the key to be successful swing trader, as I mentioned earlier, is to hold your positions until the trend is over, and to see some reversals here on oil prices. Of course, one significant area is the $50 area. You can see on the long run it's been pretty supportive, okay, and of course it's the price action is resisting at these cases. You can see the support, clear support here and here after the large volume break, and you can see that those breaks of key levels we can witness on large volumes. So if you have missed this opportunity here and you're looking for further downside, of course you will enter here. You're not going to enter over here, okay? You're just going to lose a lot of time between here and here. You don't need to lose that time. But of course, on every new low, you're taking part of your profits, so you can protect your assets and of course protective stops as well. Just 20-30 cents above or below key level as well. These are three instruments in which we have focused so far on swing trading. You can see that we've been discussing these cases throughout the whole month, especially when we, let me just clear that out for you, especially when we spoke about gold prices. We were somewhere around here when we were actually about to validate a double top formation. Okay, so we have followed through the whole time what happened with these prices, and what we have found out to be true, it actually materialized. So right now we're looking for further upside on on gold prices, further upside on dollar yen, and of course if we take the euro, it's the same case scenario because we're currently in a sideways direction. After, of course, the long run down, then the slow movement to the upside, and the reversal of the trend, of the downward trend, which happened on this level. You see the support, the resistance is here. Once it was broken on a large volume candles, then of course a few, about a week or two time for the trend to confirm, and of course to bounce off from this key level here at 1.08680 for the upside of roughly 250, 260 pips. That's roughly $2,500-$2,600. Okay. Now, as we talk about the euro, we have the reverse case scenario for oil. We're looking for continuous downside because of the key area at $50 a barrel is still intact, and we're looking for further downside. Now, I do understand, I've had some questions recently about about some oscillators and indicators that traders are interested in, like the parabolic support and resistance, like the ADX. Well, of course you can use both. However, we have much better systems on 1 hour and 4 hour charts when it involves particular volatility indicators like these. Now we're looking at volume. The volume is built on a slow basis, okay? Swing traders usually, as I said, hold positions for a long period of time, which means that the histogram of the MACD is absolutely enough, so you don't need to use any kind of complicated technical indicators. But of course, it's always up to you to decide whatever you want to use. And of course, furthermore, there are other indicators that if you're interested in, to use on a smaller time frames for better exits and better entries on a price level. But since we're talking about just a few dollars or a few tenths of pips, for example, on currency pairs, I'm pretty sure that a swing trader that makes thousands of dollars every month wouldn't really care about a few tenths of dollars of the lost profits. But in any case, this is up to you to decide. Now, I wouldn't be so thorough about something like this, just a few pips. As long as I'm getting that confirmation that I'm needing, I don't need to look at any other chart. The 4-hour chart is absolutely enough for me. But of course, smaller time frames could offer much better entries and much better exits on a price scale. Well, ladies and gentlemen, nothing complicated today. This is why we actually gathered here today, so we can combine everything we know, talk a little bit more about the exits and protective stops of the instruments that we have traded for the past 1 month. And as we can see, it's been a very profitable month for everyone. I'm getting pretty good emails all the time about the profits that we make along. And of course, one more time, if you have any case scenario and a problem, you can always come to the website GDMFX.com. You will find a pop-up chat on the bottom right corner, where of course you can just throw your questions over there, or just ask for an assistance, and we would immediately, of course, answer to each and one a question that you might have. And of course, you can just call us on our hotlines. We can always assist you there straight away. So that's all about the session of today. Please expect from next week on Tuesday, because it's Labor Day on the first day of the week next week. So basically the office is not going to be working. But of course, from Tuesday, you can start signing up for the new webinars of the next month. Thank you very much for joining us. And of course, I'm going to see you again next week. Bye-bye.